Hatem Dhiab is back with us from Gerber Kawasaki to talk about the report coming up as we shift our focus towards some earnings. Hatem's back with us. Good to have you here, and thanks for jumping on this afternoon. So is this a reopened trade, or did it already get plenty of action when people were parking their businesses and working from home in Airbnb the last year?
Thank you for having me back, Oliver. It is a reopening trade, but also it's also a platform. It's a tech company. It's not a pure travel play. So I think you got caught into the whole valuation, and it's not a cheap stock at $100 billion. But it's a really well-run company, and they really did well in the pandemic. I think we'll all change our habits after what happened, and Airbnb is going to thrive.
Okay, how do we define thrive for Airbnb? Does it need to just rejuvenate top line growth, sales, and show bookings pick up? Do they need to work some magic on the balance sheet, profitability? Where do we stand with this company? I can't tell if it's new, if it's old.
Yeah, all good. I think they need to do all of that. So they went from really strength to even stronger last 9 months per se. They basically have $1.8 billion in free cash flow. So the business is growing, and they actually even reached a higher gross booking and profitability since before the pandemic. So they are actually printing some really strong numbers on growth, on gross bookings, on free cash flow, and I think they're going to be profitable going into 2022. But I think they just need to print the 30–40% growth for the stock to keep moving up higher.
Okay. Hey, 30–40% growth, nothing to bat an eye at, certainly. And I do like the idea of this being a growth and tech-driven, structure of the business, but also one that is pretty straightforward, alternative to travel, hotels, and something that's, you would think, going to benefit as life gets back to normal, right? I mean, even though there were some areas where people would park and do the work at home at Airbnbs, I mean, generally the same risk points as staying in a hotel, staying in someone else's place. So, I mean, I can see how this thing has suffered from COVID. It just hasn't suffered quite as bad as some of the other direct travel plays. Why do you think that is?
Well, the stock is only down 20% from its high.
Yeah, not bad.
Not bad at all, right? They've performed quite well. I think the last quarter, actually, they changed the narrative. They showed us how well they've done during COVID. But I think now we're all agreed that people being able to work remotely and renting Airbnbs and staying for longer than a weekend. And then really, there's a lot of pent-up demand. I think people just want to do things. They have money to spend, they want to get out, and Airbnb is providing that for them. Brian Chesky actually is living in Airbnbs for the last few months. He's such an awesome CEO, and just to show that people can do that and running his company. So I think this story is going to play itself out over the next many years. The brand is really strong, and that flexibility that it provides for people when they want to travel is just fantastic.
Okay, I like that point, and the revenue growth here pretty big. The amount of cash flow too is pretty impressive. Is there anything they need to spend on? I mean, it seems like Airbnb, whenever I hear about them spending, it's mostly on legal battles or navigating courtrooms. What do they do with all that cash?
I'm sure they're going to invest in more tech. The product is already pretty awesome, but you just said it, right? Like, the biggest risk with Airbnb is the regulatory environment, right? There's a lot of cities that don't want to have Airbnb. I'm calling in from Santa Monica. You can't have Airbnbs in Santa Monica because the city basically doesn't allow it. And I think that trend is really hurting them in a lot of the cities. And they're going to have to fight it out, and they have to kind of go and change some rules in some places. They have to lobby and so forth. But that's really the biggest risk that you see. And then the second is just an expensive company. It's a $100 billion market cap for a company that does $6 billion in revenue. So I think it has to catch up to that valuation. Okay,
there it is. Stock down from the highs, but there's a lot worse stuff out there, and it's got 3 weeks running here of pretty good strength up today with some of these reopened trades. Hatem, thank you very much. Appreciate it.
Cheers.
You got it. Hatem Dhiab is managing partner at Gerber Kawasaki Wealth Investment Management.